Hey, good afternoon, traders. This is Trader Tim from E-mini Mind bringing you another Monday market analysis. Today is January 25th, 2016. Lots of good things going on in these last couple of weeks. I wanted to highlight kind of where we're at, some of the things that are coming up this week, along with some trade setups. If you tuned in last week, we did a live session on Thursday morning. I've got that recording posted at eminimind.com. We had a couple of trades using one contract for simplicity's sake, and we took $350 profit that morning. So if you want to check out those setups as I walk through them live, just go to eminimind.com, and it's currently the first post. Now, as we came down in the recent weeks, we came all the way down to the super large 50% retracement, prior support, whatever you want to call it. But we're kind of hovering down here around the 1840 level. And let's see, let me remove some of these so you can see it a little bit clearer. We had the really nice hammer formation back here, and I think that's going to hold for a little bit. We've got new home sales Wednesday along with the FOMC meeting announcement. We've got durable goods jobless claims on Thursday and GDP on Friday. So, there's a lot of catalysts, but the overall sentiment from the media is so much negativity and bearishness on the market that I would not be at all surprised if once the FOMC meeting news comes out or GDP on Friday, it would not surprise me at all if we get a really large spike in the up direction. A lot of people are fearful and going into cautious mode, and so it's in these situations that when the media and a lot of other news outlets are talking about the market going down, that we'll actually end up doing the opposite. So don't be surprised if later in the week we get a big spike here. That being said, this 1804.25 on the ES is a super, super big level. Because if we break that and come down and break the 1772, there's really not much below us that can really act as support. And so we'll be kind of in no man's land for a while. But if we go to a 15-minute chart, you can see that it's a lot of congestion, consolidation at the 1840. If we pull from lows to highs, we had a nice, very large, either a 15-minute or hourly setup, depending on how you look at it. And then currently, sitting in lows to highs, another 15-minute or larger hourly setup. Now, if this one breaks, not a big deal to come all the way halfway back here, but in the meantime, we're holding at this 1840 level in a series of longs. The intraday setups have been super technical and really good. So at this point, I would not be surprised if we get some sort of a bounce down here. Let's see. Let's take a look at the broader indices real quick, as well as the volatility index. Come on. There we go. So we'll start with the S&P, and then we'll go to the Dow. Basically, mirror images of each other. The Nasdaq, we're looking at kind of this swing high back here to be broken. And if I go back to the S&P, you can see pretty much same scenario, a little bit of a swing high back here that we're looking to break. And then the Russell. And Russell's a little bit smaller, but again, we get these. We had move lower, sideways, or a slight bounce, and then another move lower, a little bit of a bounce, move lower, tiny bit of a bounce, and then sell off. So we're seeing if we can break that trend, getting a little bit of a bounce. You'll notice that we did break the very tiny one-day swing high right over here. So that's a potential trend change could be forming. I do like the hammer formation. The give or take, the doji, dragonfly doji almost. And we got some lining up here at lows. If we go to the volatility index, nothing crazy, which again, we're just kind of in the low to mid 20s. So if you go back here where we had the prior spike down, we were up in the 50s. And then, so if I go back to the S&P, that was this over here. Well, we were at about that same level in terms of the decline on the S&P, but whoops, look what the VIX did. We did not get as high, so there's kind of a discorrelation, if you will. So, like I said, not surprised if we get a big bounce or a at least a short-term big body candle or a couple of them, because we do have some big catalysts and the sentiment does seem to be down, so a lot of times we'll have the opposite effect. So Wednesday and Friday will be the big days, really Wednesday, Thursday, Friday, but keep an eye on that economic calendar just so you're not caught off guard. Wednesday, no trading or very little trading in the morning. I would not recommend trading around the FOMC meeting announcement because it can be super whipsaw, and you'll get a spike in one direction and then an immediate spike in the other direction. So you can have a lot of slippage, and it's just a real dangerous time to trade. So be cautious there. And tons of good stuff I just posted over at the blog emoneymind.com, and as well as in the VIP members area. So if you go to emoneymind.com/VIP, you can get access to all of the webinars I've done, live trades, how-to videos, some really interesting documentaries I put in there as well, interviews with myself and other traders, and just a whole bunch of good stuff along with more of these weekly analysis videos. So check that out over at emoneymind.com/VIP, and we will talk to you again next week. Thanks. Have a good night.